they must be relevant and faithful. What does it mean? And these are the qualities, we call that qualitative characteristics or fundamental qualities. So the report that you saw on company website, not on social media. So which one is authentic? So social media report is authentic or company website authentic? Of course, company website would be authentic, right? So the goal of the company is to present faithful and relevant information. So let's talk about this. Relevance means the information must make a difference to the decision maker, right? You give me I ask you what is your profit and you are giving me, we have 200,000 shareholders. That's not relevant for me. Plus, that is not even have a material impact on me. You have 200,000 investors with you. I'm asking what is the profit of your company, right? Plus, that information help or predict or confirm the value as well to be the relevant information. Must be material means it must be in currency, right? And what do we mean by faithfulness? Faithfulness means free from bias, free from errors, right? There shouldn't be any fraud. It's not like that, oh, we reported a profit for 100,000, but our accountant made a mistake and make it like 1 million. So there's a difference between 100,000 and 1 million. So for this one, what will happen? There are some auditors who confirm and who signed that one. Okay, this is this is the faithful representation up to the knowledge of our auditors. So we are signing this statement and we are confirming that the company made $100,000 profit. So these are two fundamental qualitative characteristics. The next one, in order to be relevant, the information must be comparable and verifiable. In order to be faithfully representative, it must be understandable and the in timely manner. Comparability means the information that you providing should be comparable with the same period, right? If I ask the report for 2011, then you must provide data for 2011 and you must compare with other companies in 2011. Verifiability, it should be verified through authentic resources. Why? In order to check for accuracy, right? Reliability and completeness. You can verify, it should be verified. How it can be verified? You download it from company's website. You see the stamped over there, it's like that. So it's not a fake document. Timeliness, it must be provided in timely manners. So if you are an investor and you want to invest, right, you go to the company website, all the material should be available so that you can have timely investment plan over there. If you want to invest now and you receive information after 3 days or after 6 months, then it means the information is not timeliness, right? For example, in 2011, how much profit company reports, and that information is coming June 2012. It means the information is not timely. Why? Because they wasted 6 months to publish that profit information. Understandability, which means it should be sufficient, transparent, that it can be understandable reasonably. right? We shouldn't use, very difficult language or too much, grammar, or, very, you can say that, traditional words, so that inform users, reasonably informed users, they can understand that. Everybody understand that what does it mean by profit. So do not change this word from surplus, right? So you must use the word profit, not surplus. You understand? So the cost constraints are, so it looks very nice. You see the structure is very nice. If you want to implement this concept, accounting concept on a company, you must think about its cost as well. So all this structure is not easy, and it's not free. You need to hire lawyers, you need to hire auditors, you need to hire those who understand the accounting, the chartered accountants, or the person who have studied or who have, done bachelor's in accounting, major in accounting, masters in accounting. So they have the cost, right? So if your business is small, then you cannot afford to implement the conceptual model or foundation of accounting. So you must compare the costs as well. So for big companies who have revenues in billions of dollars, who have capital in billions of dollars, surely they can afford that. So cost of disclosure should not exceed the expected benefit to the user. What are the expected benefits? If conceptual foundation is implemented, which means information is relevant and faithful, then what happened? More people will be ready to invest in your company, to buy your shares. And if you need capital to expand your business, even banks can give you capital, loan you some money with little interest rate, or with reduced interest rate, right? And when the cost is, appropriate, then you go through GAAP or IFRS. There are two bodies. If you are in US, you would follow GAAP. If you are outside of the US, they have their own GAAP. For example, China GAAP, Pakistan GAAP, India GAAP, or the IFRS. So assumptions are, there are 4 assumptions of the accounting. Number 1 is entity assumption, which means organization stands apart from its organization and individuals. It means owners are different, business is different. So that's why we see, sorry. So that's why we still see the word Nestle and Coca-Cola. In partnership, if one owner dies, partnership dissolves. You cannot carry the same name. You need to revise that name. So we see Nestle for more than 150 years. We are seeing Coca-Cola for more than 130 years. Why? Because they established corporation or company. So number 1 rule is entity assumption. Your partner can die, they can die, but the organization, they don't die. Plus it's separate. Continuity, we call this going concern. There is no end value. Like you have 50, a human can live, normal human can live 80 years. So it means the business life can be 80 years. No, the business life can be unlimited. If you go to Google and you type it down, you type over there, the oldest business, you will find out from Japan. And it's for more than, I think, 14 to 1500 years. It's just for your curiosity. So you can just log on and see that over there. Historical cost principles. So you should report your or record your assets on actual cost. For example, you started the business in 1990 and you purchased the land at that time $100,000. But if you see, that land right now is $1 billion. But since you have purchased that land at 100,000, so you would report that you purchased the land at 100,000. You will not report that it is $1 billion right now, right? So handling that stuff we will talk about when we do the accounting in assets chapters. So remember that whenever we purchase, we record the amount at the time of purchase. And then when the amount is recorded, then we cannot change that unless something new happen or some, you know, impacting information, your business impacting information arises. That's it. Stable monetary unit, you cannot say that, okay, our business, we use dollar and now we are using Australian dollar and now we are using Chinese yuan, right? So you can change, but it shows some stability. For example, you use 10 years dollar and then you shift your business to Australia, then you are using Australian dollars. And after 20 years, you shift your business to China. But it's not like that. One year you are using dollar, other year you are using Australian dollar because Australian dollar is rising, it's appreciating. So you are using Australian dollar. And now you realize that the yuan is rising. So let's convert your transaction into yuan. So it's not gonna